Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, April 3rd, 2018. Well, folks, getting into the charts here, I wanted to go over a couple trade setups that I'm keeping my eye on. Here you have Temma Pharmaceuticals. You can see that the stock obviously was in a free fall quite a bit, made a low pivot in kind of October, November of last year. And since then, it actually had a tremendous run. It went up 100%. So a full 100% move from the low pivot here all the way into January. That's a pretty remarkable move. Now, since then, notice how it's slowly fading. That's actually bullish. What that is it's digesting the 100% move off the lows. And really what you want to start to look for is an opportunity to buy. So the question is where, right? I mean, analyzing the chart, what's the chart telling us? And the bottom line is you have the inside bar consolidation, slow and controlled consolidation, which is bullish. Next, you want to find a level. And here is the level that I've pinpointed as a multi-factor trade level. And again, if I put a trend line in right there, you can see it's just below 16 at around 1550. So again, 1550 is your entry price. The reasoning is simple. Number one, you have a high pivot right here and a low pivot. So notice how you ran up here, you hit this area, and then you pulled back. So that's telling you that's resistance. Then you pushed up and blew through it, breaking resistance. So that line now becomes support, and you did a retrace into it. So this is telling you that this line is significant at 1550. The other factor that I find fascinating is that if you do a Fibonacci retrace, so if you take this low pivot to this high pivot here, and you do a retrace, your Fibonacci retrace lines, you'll get a line right there which happens to be a fib level 0.618 or 61.8 Fibonacci retrace. So what that's telling me is when you have two factors aligning themselves at a particular level with a bullish kind of inside bar, slow and steady consolidation digestion move, this becomes a high priority long opportunity. So again, basically what it tells you is the odds of getting a bounce if the stock comes into there in the next week or so would be about at 80+%, maybe as high as 90%. So again, once you get into levels like that where the odds are so in your favor, to me that's a trade that I want to be interested to take, and I will likely take that trade. So I've put it on my radar. Now, turning your attention here, folks, I pounded the table on this chart here. This was a great chart, folks. And again, here's your chart of Tesla. I have a couple other lines from a while back that we were discussing with members here as the stock was coming down. But beautifully, I gave them all this area right here. All right, I said this is where the stock is going to have a significant bounce. And sure enough, I mean, look at the bounce today, folks. Up 17 bucks. Yesterday we bought at 247.5. I mean, think about that. 247.5. So we actually bought right around this trend line. It even bounced towards the end of the day. We were up by the close of the day yesterday. Held it into today, and here it is basically at 270. You're talking about a 22.5 point gain on Tesla since our buy yesterday. And again, this is just simple chart analysis. I mean, basically what I just talked to you guys about on the Temma Pharmaceutical chart, I mean, these are the same techniques being utilized, the PPT methodology. And it is a methodology that Nick and I, my partner and I, have come up with. We have perfected it. We've been in business, obviously, in the money stocks has been around now since 2007. So we're talking about 11 years of putting this to work. Profitable every single year. Doesn't matter if the market was crashing in 2008 and 9 or if it was rallying higher over the last few years. It was just a matter of how much were we making. And again, this year, by the way, has started out to be the best year ever because of the perfect amount of volatility in the market. We always talk about this, but I want to just mention it, is that once you get a VIX that's north of 12, anything above 12 is going to be gravy for swing traders. Really, 15 to 20 is perfect, but even down to 12 is good too. And that's going to make you literally bank money left and right. And that's what we're doing here at InTheMoneyStocks.com, folks, as we can see it here on the Tesla trade, as we can see it on the verified track record at InTheMoneyStocks.com. I mean, this is the gravy train. And I can even show you, just to take a quick second, I'll actually show you a couple trading opportunities after. But here's our website, InTheMoneyStocks.com. And if I just move over here a little bit, you can clearly see we have the free services. Let me just rotate it over a little bit more and get rid of that box. Here's the free services, and here's the track record for the research center, and it speaks for itself. I mean, this is just, these are trades, and you can see we actually played. What I love about this is check out Tesla. We bought Tesla just a couple days ago, and we sold it the very same day for a $20 gain as well, 7.85%, the same day. And then it came back down yesterday. We rebought. So this was Friday, came back down yesterday. We rebought it again, and now we're up another $20 on it. I mean, it's incredible. The learning the charts and how to do this is literally the game changer for people's lives. And it's interesting. We were talking in the chat room today, and we had members posting about how much they've made and how we've changed their lives, and it's life changing. And it is, folks. So if you come and learn this, if you come join the research center, take the 7-day free trial. But look at the trades. I mean, you'll see a loss here and there. Nothing's perfect, but the point is, there's no hedge fund out there that's making 10 trades and 9 of them are profitable like this. I mean, this is just the PBT methodology. In fact, my business partner's going to be giving a live teaching course Wednesday and Thursday of this week to a hedge fund. So they've called us, and this is not the first time it's happened. We've done it multiple times before, but they want their traders at the hedge funds trained in the PBT methodology. And how can you blame them when you see these results? So again, bottom line is, this is where it's at. Going back to the charts, folks, I want to show you a couple other charts that I'm keeping an eye on. One that a member in the intraday stock chat brought up to me today that I'm going to keep an eye on is flowers.com. Just because it is so cheap now, I don't think you should marry this stock for the long term. It definitely has risk longer term, but I do think it's due for a bounce down here. I do think it's due for a bounce and should be noted as such. So keep an eye on FTD as a possible opportunity to the upside. I think you're looking at like 425 to 450 upside. Maybe it may get to gap window here, which is all the way at 5 and change. But again, I wouldn't get too crazy about it. All right. Other than that, I think let me just see if there's anything else I wanted to bring to your attention. Markets, again, are getting a little bit of a bounce today. Nothing tremendous, but still some upside, some bounce back. And again, it's good to see the markets. Interestingly enough, with Amazon, Trump did another tweet about Amazon today. And, it fell initially, but look at this, folks. So here was your initial. It was opening higher. He did the tweet, and it collapsed. And then we actually bought it here at double bottom and ended up making, I think, $17 I ended up making just in 20 minutes or so on the stock with members in the chat room. But I mean, you could see that the market's pretty much shrugging it off. And the reason is because investors get immune to things when it's just a repeat of it. So, last week we heard multiple tweets about Amazon, and then again, Monday we had one from the weekend, and today another one. And there's nothing new about it. It's just like, okay, here we go again, another tweet about Amazon. And so the market eventually it's kind of like the boy that cried wolf. Eventually, it starts to ignore those a little bit. So if you know that, like we did, we said, okay, this is a great fall. We picked some up at gap fill. We picked a little bit up at double bottom, and then look at the bounce you got. And actually, I would not be shocked if Amazon heads back to about 1450 right up here, 1445, 1450 within a few days. I actually think it's a bounce candidate. Now, longer term, I don't like it. I think it's too inflated. I think you'll have another way of selling at some point on it. But in the very short term, over the next 1 to 5 trading days, I think it heads back north pretty sharply. Probably a good buy here. All right, bottom line is, come join us at InTheMoneyStocks.com, folks. We will talk to you soon. Take care.